Hey everybody, welcome back to ThinkScript. My name is Mike Fairborn. It's good to be with you all. Hey folks, today I did want to take a look at relative comparisons within the market. I'd like to look at an indicator that I think could be useful in terms of looking at potential sector rotation, of course, breaking down specific changes. Hey, what's moving up faster? Looking at specific sectors, industries, and companies relative to the markets. An interesting way to kind of spot sector rotation. So I wanted to dive into that today, explain that in detail, and then of course what we'll do is we'll tie into that a ThinkScript discussion, a topic, I should say, and a code to go along with it for a column. So we can keep tabs on this and find out what might be moving quicker than the markets. And that's oftentimes due to, a sudden change in the market. It can be indication of a change in trend and also, as I mentioned, that rotation. So looking forward to going into that with you all. Hey, folks, good to have you on board. We got John the Noble Savage here today. Good to have you here, as well as Life in the Fast Lane. Gotta love some of these titles. I've seen Life in the Fast Lane for a while now. Good to have you back. We've got Kelly, Lola. Welcome, Lola. Riceberg. Great to have Riceberg here, as well as Danny from Cali. So if you are new for the first time, we do look at some of the coding that's done on the Thinkorswim platform. We're going to create a code today to help us find that relative strength indication as we go through this. But let me know if you have any topic requests or anything else you're kind of discovering as we go through this code so we can go into more details on that. Hello to you, Will, joining us. Folks, let's get started with some disclosures to get going here. Now, information here is for general information purposes only. Paper Money software application is for education purposes only. Backtesting results, which we do in this class, are hypothetical. There's no guarantee that the same strategy implemented today would produce similar results. Investing involves risk for some products more than your original investment, more than your initial investment. Past performance of any security strategy does not guarantee future results or success. Let me read that previous line again. Investing involves risks, including for some products more than your initial investment. Now, I do have a little section here on futures and futures options trading. We do look at the charts here, but there are some disclosures listed next to those. All right, well, let's go ahead and dive on into things here. I'm just going to share my platform here. We're going to take a look at a couple of different items. We've got the relative strength up. Well, we'll just keep it up there for now because we're going to be talking about it. Now, as you can see over here, we're looking at the markets, folks. We've seen some strength, obviously some recent strength within the markets, breaking up into new highs. Folks, today is another all-time high range in here. The markets have been doing well. Now, collectively, the markets are up. What's been moving even faster than the markets? There are some individual stocks that have been extended within different market indices that have also been going up. When you get to these high levels, sometimes traders will look at the possibility of a sector rotation occurring as well, or just seeing more strength in other sectors or industries. Just a quick note on this. I have pulled this up. This is just a look at a sector rotation grid that I'll use. It's going to make a lot more sense here in just a second, just a bit. But this compares the different sectors relative to the S&P 500. It's all 11 sectors in here. It's a little bit different. You got the SPX in the bottom right-hand corner over here, just flatlined as can be, because it's relative to itself. It's just going to stay at 1. But how are these different sectors doing relative to the market? Just as a quick glance initially, you can see over here what's been performing. These lines that are going up here show us, technology in this case has been stronger than the S&P 500 over an extended period of time, and that's really what's been driving a lot of the market gains. What else has been strong? Well, there's been a couple in here. Industrials, tariffs could have helped some of these companies. It's already had a pretty big lift off of the bottom here. It's an interesting indicator. We're going to look at that in just a second. Okay. Before I do, what do you see down here? How do you spot changes that could be happening in the market? Potential rotation. Well, let me just show you this. Utilities. What on earth is going on here? Look at utilities off the bottom. It's been showing some strength. Remember, this is not the chart of utilities. This is the relative strength of utilities, the utility sector compared to the S&P 500. So this has nothing to do with it. In fact, it's been very, very weak, as you can see over here. Incredibly weak. We've had some real weakness in that group, but when there's the possibility of maybe interest rates declining, or whatever the case is. And I know the Fed has a few of those already set up. Well, we'll see if it actually unfolds, but that they anticipate future cuts. A group like utilities is heavily capitalized, right? A lot of very expensive equipment, obviously capital equipment, and a lot of that is not completely owned. And so there are interest rates associated with utilities, for example, these utility companies. If those rates cut, they can be in a better situation. How do we know that? Well, we can see it right here through relative strength. Let me go ahead and just share this with you right now, just so you have it. Okay, so I think it's a fascinating one. It's a grid. So just what you're going to want to do is go over here to the right-hand side under the grid, drop down here and pull it up. But I'm going to share that grid. We'll put it in the chat box right now, and there you go. So there's our grid. All right. Welcome to all of you just joining us right now, too. Taking a look today at, well, we just talked about sector rotation, but it's an indicator that can really help us get a pretty good gauge of this. And we're going to do a ThinkScript code on it so we can find some of the companies that are outperforming the market, is where we're headed here. I'm going to pop back to this in just a second, but before I do, I want to take a look at the indicator itself. Okay, itself. All right, so what I'm going to do is we'll go over here and we'll pull this guy up. There it is, SPX. Perfect. And I'm going to pull up any old company here. How about, we've heard of Apple. There is Apple right there. Let's take off a couple of these indicators. I'm going to take off actually just the money flow for now. Leave the RSI on there, another relative strength indicator. But what I want to do is put on, and I'm going to show you where this is at. So it's right over here on the left-hand side, relative strength. It's not the index. We have the, by the way, you're not even seeing the relative strength index there. You get relative range index, something else. But this is the RSI. This is relative strength. I'm going to click on relative strength here. We're going to load this guy up. I'm just going to explain it so that we can get this a little bit more solidified, what it's all about. So relative strength compares the price movement of a stock with an index. Now it can compare a sector, and another stock to indicate that or correlation. We can look at whatever we want here. We can make different comparisons here. But how is that strength unfolding? It is derived by dividing one security's price by the other, by another security's price. And the default here, by the way, the result of this division is the ratio or relationship between the two securities. So basically, if you have the index that you're comparing, I'm going to add it in right now so we can look at it. There's relative strength. Let's click on our wheel right here, and you'll see that that is the default. It's a correlation with the S&P 500. Okay, and so just as we saw, just as we read right there, the description of it, when a price is stronger than the S&P 500, you'll see the line rise. You'll also see it dip when it is weaker. Let's change the color down here and thicken it up a little bit just so we can see that a little bit better. Here you go off the bottom. So there is your relative strength. Now, how has it been doing collectively compared to the market? It's interesting because it's kind of a reflection over here of what we've seen, much of what we've seen with the chart. But oftentimes what you'll spot down here on these indicators is if we start to come off the bottom here, kind of sharp, it's outperforming the market. And what it could mean is there's rotation into this stock or this particular group. You might find it happening in a number of different tech groups if that were to be the case. Apple's been kind of a laggard. That might not be the perfect example, but you get the idea here. And what we're going to be looking at today are some of those companies that have been outperforming relative to the market coming off the bottom. Now, that's not the only way to do this, right? We could look, let's say let's do an example here. Another way to use the relative strength index, and that would be not using the S&P 500, the SPX, S&P 500 index, but instead using that utilities. And you could use, like, there are a number of different ETFs. I can think of a few of those right now, but that other one's a little bit longer. So let me write down, I've got to get that symbol down. Let's just put that over here. I'm going to go ahead and pull this guy up. A good quick way to get to that is just to go into the Market Watch tab. There are all your sector indices. We can look and see what companies have been performing better in the sector as well. Where's the real strength coming from? Or what's been flat, but is now just starting to outperform the sector collectively? So it's dollar sign SP 500 number 55. Okay, so let's go over here. We'll put that in. Number 55. Tab through. I'm going to click OK. You can see it right there. And now we're going to be comparing the utility sector to Apple. Doesn't make a ton of sense, okay? But what could make sense is another utility company. Like, for example, Duke Energy, which I believe, hang on a second, let's just make sure that is an energy company. We'll go right over here so we can see it. Excuse me, I should say utility company. It's certainly, yeah, electric utilities. I thought so, just want to double check. I know there's energy related into it. But how has Duke been doing relative to the utilities sector itself? So another way to do this, we're just comparing performance of the underlying sector to the company itself that's within the sector. Now, what I wanted to really look at is what is that performance like going out here 3 to 10 days? Wouldn't it be nice to know if you had this company starting to break out higher over 3 to 10 days, the 3 to 10 day time frame? It's being stronger than, for example, the sector itself, or relative to the S&P 500. I think that's where it becomes really interesting, because then you can kind of spot big picture how this is performing across a ton of other stocks out there, right? What's really showing the strength out there, and relatively recently compared to that index. Okay, so I wanted to look at that, and that's kind of one of the key drivers I've had today. So when we come back over here, now that we've kind of talked about that indicator specifically, I'm going to drop in the sector rotation grid again so we can look at that. Now you can kind of get a general sense of what we're looking at here. Now these are all relative to the S&P 500, which we just talked about. But I want to kind of highlight something over here. Notice up top, in fact, I'm going to just put this on a 3 wide to we can see it a little bit easier up top here. There we go. So we're just looking at the industrials right there, okay? The industrials going back over that 6-month time frame. The market was going, we know the market bounced here, but industrials, because the relative strength line was going up, it was actually even bouncing up sharper than the S&P 500 itself. Now, a lot of times there could be other drivers behind that. There could be fundamental drivers, whatever the case is. Yes, it went up like the S&P 500. But the fact that this line is going up tells us that it actually outperformed the S&P 500 on the bounce. And it could have been one of those to keep an eye on for, well, let's just point it out. Possibility of a flag pattern as well. We were resting, we actually came down and rested on prior highs before we ran up a little bit higher. We talked a little bit about this in the swing trade class, not so much on the sector rotation, but this could have been a massive sector rotation because the whole thing was a tariff pullback, but then we fired up stronger on companies that were, kind of maybe a little bit more tariff related or could benefit from tariffs as well. So I'm going to just show you this kind of in hindsight what we were looking at there too. So a couple of different ways to consider this, all right, as we look at it. But that was the big spike, so you can still see bigger spikes even though the market's going up. You're still going to see what's really performing within the market all through charts. So I think that's a really, really helpful guide. So again, starting with kind of an indicator and building up on that relative strength. Where might that rotation be big picture? Now, over here, we did have also real estate, which is interesting. A little side note on real estate, I'm just going to throw it out to you guys. You might have seen my my X post on this or my tweet, but real estate has been down for quite some time, right? It's just one of those sectors. But one of these, some of these companies do have like that TTM squeeze in here. Some of these sectors, collectively, big picture can have that too. So that's just kind of an area to look at as well. as we looked at that. By the way, I want to actually pull it up and show you some of those because they have been moving, and we are just seeing it's just one of these sectors that's coming off the bottom. Just a quick note on REITs, though, is I want to state this because I brought up real estate. The risks of REITs are similar to those associated with direct ownership of real estate, such as changes in real estate values and property tax, interest rates, cash flow, and underlying real estate assets. So keep that in mind. But if we come over here, I wanted to highlight this because we had kind of two indications here that there could be some insight into, well, maybe the real estate group. In fact, we do have the TTM squeeze bars over here. I thought it was so interesting to see this guy. Is it still on there? Oh, let's see. Real estate. No, it popped off. Yesterday, it was at 21 bars. We actually have the communications sector that's really kind of holding flat right here. But how could we pair those two together? Well, as we talked about the TTM squeeze, the Bollinger Band coming below the Keltner channel, right? And we'd come down into a sideways range for a while, actually, on real estate, right? We went to a sideways channel. When that happens, sometimes you get a move out of it. When does that sector rotation occur? When does the RS, the relative strength, start to pop up? Some of those companies you'll find starting to move already. So it's kind of like the TTM puts us kind of in a pipeline of a potential change, and then we're starting to see it in other ways pop up. We're going to have one of those today here. So pull that up here. I'm going to just show you real quick so you can actually see. This is not the chart of real estate. Remember, that's the relative strength. This is the actual chart of real estate itself down below. Now, there is real estate, and you can see that is what I was referring to as a 21-day. It's a long one. It's a 21-day sideways pattern, and we're just starting to come out of it. But notice we're getting relative strength higher than the market. That's where funds could be, actually funneling into. All right, so this is what I have in place here today. Let's go ahead and let's start off with the NASDAQ first. So as we get into this, NASDAQ 100, it's not going to be the TTM squeeze, although that's a very interesting one we looked at. I bring that up because we talked about it a few weeks back. I'm going to take it off for now. Otherwise, what we'll do is we'll run into a limit on how much we can show. So I'm going to pull this one up. This is the one I wanted to share today. So it's relative strength bars. And I started off with 3 bars. And I'll show you how it loads up, and we'll go through the code in here and how it can be helpful. But that is relative strength bars. And what we're looking at is a streak of bars is how I've kind of titled this. A succession of bars going higher. Let's kind of organize this together. I've actually found a way to, I wanted to point out to you guys too, this different code that we can have different sort of colors pop up. These two I might need to change, and we could certainly do that. But you can see from 3 to 4, there's a slight shift in color. You pick up on it a little bit more over here. Actually, I think 3 and 4 are actually in the same grouping, and then 5 and 6. But you can change, by the way, different, as we've done this in the past. We've had them all the same colored bars. But getting a little bit more insight there. This company right here, MDB, MongoDB, Internet Services and Infrastructure, this one has been strong for quite some time. Okay, about 8 bars beating out the NASDAQ 100. We're going to look at that. We're going to compare the indicator to confirm that that is correct. The interesting thing is that it can start off with maybe like 3 bars, but that's an interesting indication because you might continue to get a really strong trend coming out of here and then a follow through. Does that make sense, you guys? That's what we're looking at. Oh, let's see. In what time frame is the change in the RS for the sector to clue rotations? I'm using 3. So I said in this indicator, we can change it too if we wanted to, but I said 3, and there's a reason why I chose 3. And let's actually go into that right now. It's right on time. That's exactly what I wanted to address here. So as we go in, do you notice the first one in there was, let's look at BIIB, okay? Doesn't mean the stock's been up. We could just say it's been outperforming the NASDAQ 100 the last 3 days right here. So let's go into it, check it out. I'm going to go in now into the chart, and we'll go back to our regular standard charts. We'll pull it up. BIIB, and there you go. Okay, so this is one of the companies too. I think, well, this may have been one that was in the TTM. I know a lot of the healthcare group, biotech would certainly fall into that range as well. We do have an earnings announcement coming up, but this move right here has been exceptionally strong just the last 3 days. Now, has it done anything else? No, but because it's been so strong, could we possibly consider putting it on our radar? Because it may continue. It's been stronger than the market. There's the market of the NASDAQ 100, which has been very strong. Let me take this off. I'm going to actually dump both of these. And we're just going to put on the relative strength. Strength index. There we go. We're going to keep this relative to, what was it we were looking at? The NASDAQ. Although, you can see that it's also up relative to the S&P. Let's thicken this up so we can actually see it. There we go. Okay, so there you have it. Was it up over the last 3 days? Let's just measure this. Let's talk about it. There's 1, 2, 3. We'll use actually Thinkorswim. It was up there. It was up there and up there. So cool. So it's confirmed on the indicator down below. Right? We've got that confirmed. It was moving up. When you see that much strength, though, behind the scenes, well, watch it going forward. Now, I am using 3. So coming back to Chris's point, I am using 3. Now, I want to ask you guys, have you heard of the 3 soldiers up or the 3 soldiers down before? It's a candlestick pattern. It's one from the earliest book. By the way, the very first book that I read was a candlestick book. And after reading that book, I actually thought, okay, this is easy now. I've got my ticket. It's already done. Little did I know I'd be talking about a million other, having to study a lot of other additional components, right? Because candles is just one component of the market. But that was the first book I read. And I remember the 3 soldiers up and 3 soldiers down because it's a very common characteristic. And it just means that sometimes I realize I'm just looking at BIIB here, but there's a 3 soldier down. 1, 2, 3. You kind of flatten out. That's more than a 3 soldier down for sure. But there's something that can start off with 3 bars. If you can outperform the market on a 3-bar time frame, some traders will say, I get confirmation. If they're looking like, say, for example, just comparatively speaking, they're looking at a close above the high of the low day, like a hold right there. You got a hold. And some people say, I want a confirmation day 1 after. So I want a +2 day. And then after that, I'm good to go. Well, that is your +3 right there. So I've kind of built this script, this column, so that it looks at least at 3 days up to 10. Okay, now there could be more in there that outperforms, but that's like literally, you're kind of getting that 3 soldiers up. In addition, what you're getting is a 2-week run. 10 market days is about 2 weeks. So about 3 days to 2 weeks, 3 to 10 days is what we're shooting for here. Okay, that was the whole plan here on getting this in place. Now, what's cool is you can alter this formula if you want. In fact, let's just go back to it, take a look at it again and see what else we've got on the NASDAQ 100. It's going to take just a second to load up. I'm going to go ahead and just kill this PE. I don't know. It might speed things up. It might not. We'll check it out. There you go. So we've got a few of these, but I want to go through them and we can look at them. There's not that many, but let's just go through and see what we might be able to find in here, just using the NASDAQ. We'll run it against the S&P 500 here in just a second. By the way, I believe that was the title there, Wiley, or the author. Yeah, I think so. It was way back then. I will say this, it was kind of funny, but I mean, there's a lot of different books out there on candlesticks, and a lot of them are just, they correlate highly. But this one, was from 1995, first one. Just don't have the title or anything like that. But the strangest thing, it was in my local library, but it was from like the UNLV library. University, let's see, Nevada, Las Vegas, University of Nevada, Las Vegas. I remember it because it was my first book. You guys, I thought I had it made with that one book, I mean, some of the patterns they were showing, you couldn't really fail. It was tough to fail. All right. All right. Let's go into FANG over here. Okay. Notice there's going to be some indications of what we've been seeing previously. That the key thing is here is we might be seeing something very interesting here. We might not. But the relative strength, if it's going to be that high in the NASDAQ, do we keep an eye on it? It just broke above this range as well. It broke above these highs. Look big picture. Bottom, bottom, higher lows right across the board. I don't think energy's doing too great, but I can say this. Drawing from the left-hand side to the right-hand side, boy, I'm going to slaughter this one. That's supposed to be a diagonal line. But you can see that we did take out the trend line here too. Sometimes you take a trend line for a run. So it is interesting. It doesn't look big, but remember the NASDAQ has been relatively strong. AZN. So another healthcare. This is a pharmaceutical. Then look at Dexcom. Those guys do the little patches that you put on your arm for the diabetics. Okay, can you see the moves off the bottom? Relative strength right there. 1, 2, 3. Pretty powerful relative to the market. Obviously, earnings can throw a big wrench into everything. I mean, what happens around earnings? We have to kind of consider that because things could change. But many of these companies might be. Let's look at a weekly chart. I don't know. They're on the verge maybe of a trend line break longer term. They've been in a consolidation for basically almost a year, really. We're about the same price, actually a little bit lower from a year ago. So looking at that, there you go. Let's just run through some of the other ones a little bit quicker. I like to look at some other points in here. Now, what do you see on Dexcom? Maybe a sideways range. Relative strength had been underperforming the NASDAQ for quite some time. Not through here, and not around the last earnings announcement, clearly. Over here, obviously, we have earnings, and be mindful of that, of course, but just starting to move on a 3-day time frame. Let's get into some of these longer ones that we can look at here, too. Let's see if there's anything we could look at. I'm going to do this on this company here. We're just taking out a highs. And notice over here, too, we've got a series of highs. Higher low, higher low, higher low, higher low. I realize we're coming into a resistance level right there. So what I'm going to do is and I might use something like this for even the swing trade class. Let's just see, because that could be a longer term kind of a flag pattern. Do you see it? Kind of like sometimes some of the stronger ones are kind of bull flats. They refer to them as flats, not flags, because that flag holds so well for the sideways range. So yeah, I mean, maybe that's something that could be of interest if in fact we start to take out. In fact, I'll do this. I'm just going to raise it up to about here, maybe like above 90. What about that? Creedent Alert. We'll use that Thinkorswim platform a little bit more. Breakout. Question mark. Have it text me, okay, over a period of time. All right, let's continue. We've only got a few of these. We had Dexcom. We had, it has to reload. Okay, that's okay. That was 4 days, Dexcom. We actually have another one, IDEX Labs. So quite a bit of healthcare starting to bounce. Collectively, we'll probably see even more than in the S&P 500 as we pull it up. But let's go through some of these. Let's see. IDXX Intuit has been strong, and I do want to take a look at MDB. Okay. Some pretty good strength there. Anything interesting here? Could that strength, is it going to be enough relative strength to push us above that level? Boom, we're right at that point. It's kind of the possibility of an interesting breakout there. Maybe there's still earnings to consider. The last earnings did good. The last earnings before that did good. The last earnings before that didn't do good. Neither did that one. So I don't know if it's going to be a three-quarter win streak on that one or not. Let's take a look at MDB. This is the one that had 8 days. We're going up to 10, and many of them are, MDB. MongoDB. Wait. Hang on a second. Yeah, MDB. MDG. That's going to make a difference. There we go. MDB. Consolidation. Breakout. Earnings. So we're past earnings, at least for, the time being. We have them, looks like, later in August. But that's a bit of an interesting kind of a flag pattern. Sort of breaking out, kind of retesting here a little bit. Yeah, curious, can we take out this level? There's a little bit of a gap right there that can be challenging to get through. But again, spotting maybe some of these companies that might not otherwise come up just by using relative strength exclusively here. All right, let's do this. We'll look at the S&P 500, but I want to show you guys this. Let's share it too, so you've all got it. But this is it, and I want to show you kind of the logic behind it as well, and I'll just share it right after. So again, we're using the correlation. We're using this strategy to correlate. It is a relative strength up days only here, okay, that we've got. Now, I do have us listed here, and let me just explain kind of the bigger portion of the coding here. It's just really straightforward. You can see me go up to 10 days here. I have kind of just positioned in here defining that streak. The RS, it's not the RSI, but the RS, and this is just simply stating that RS greater than 1, excuse me, from 1 day ago is less than 2 days ago. In other words, the RS is going up like this. So this is kind of a simple, straightforward code to help us kind of add the label down below. It gives it, we're defining what we want, so we can provide that information down below. You can see over here, if it is greater than or equal to 3, I've got our numbers listed here, then 1, 2, or 3, then the streak plus RS. Now, I've just had written in here, I wanted to just say RS, just something new on the side. You can have it state whatever you want, but this is how you could do it, right? And I've also got a, so I've referenced it down here. Why did I put it at the bottom? But you can see down here, it got flipped, I guess. Okay, that's okay. But it just says, hey, greater than or equal to 3, we've got a color of orange. Greater than or equal to 5. So 5 RS days in a row consecutive, right? Because it's got to be a streak. We're not looking at anything falling off. Yellow and then green if it's greater than 7, 7 up to 10. So it's just kind of like different ranges. And if you're using this indicator frequently, then you can, I mean, you'd be able to recognize that very, very easily. And by the way, just change it to whatever color you want. You can change, you can add in more days here too if you want. But remember, if you do that, you're going to want to just note, you're going to want to put different references in here for different streaks as well. Okay, but let me go ahead and paste this into the chat box. There it is for you guys. It is a ThinkScript code for columns, right? And remember, these scripts aren't guaranteed for timeliness or accuracy, but as long as the data is running through the platform well, then we're going to be just fine. We're going to be just fine. I stole the data from the relative strength indicator itself up top. So that is where I've got it. Looking back, you notice over here, I do have a max length of 10 bars that I'm looking at back. I could go more, but I figure, hey, if it's gone on too long, the trends may be gone up really, really far. Catch it the first 3 days to 2 weeks was kind of the idea behind this. Okay. All right. Let's look at the S&P 500. We have a little bit of time left. Let's pull it up. We can scan through whatever we want to remember. If you wanted to come in here and change what we're comparing, we could do that so easily, right? We could look at relative strength. We could look at different, in this case, we're just looking at the index, but what is the relative strength looking at itself specifically? Well, it's the SPX right here, the correlation. But it is the correlation of the SPX, but we're looking at it within the NASDAQ 100 too. So we can put an NDX in here. I guess that would actually tie in even more clearly, obviously to what we're doing in here, but there's the NDX relative to the NDX, SPX relative to the SPX. I'd flip that over earlier. We can easily flip it back though right here. I'm going to do SPX now relative to the SPX, but you can change it. And I wanted to show you guys that because, of course, you can use this exact same script column for finding sector strength out there too. Just throw that in and then take a look at the given sector. So pull up the sector and find out what companies are within there, and then reference that with the column to see if it's outperforming. Let's go right into the S&P 500, shall we? Boom, there it is. Okay, this is going to take a little bit longer to load up. There it goes. We're going to have a lot more to look at, but let's just see maybe some of these others. Ooh, quite a few, but I mean, not relative to the S&P 500. We don't have that many, you know, but we do still have a few. It's still counting some of these longer ones. As you can see, those are popping up as well right now. Just going through the list. Let's look at just some of these over here. So PayPal's in there. Okay, so you're getting Hershey. Oh, wait, let's see. I think Hershey. Wait, I think Hershey got bought out or is in the process of being bought out. That would make sense. We'll just ignore that one. What about Invesco? IVZ. IVZ. I want to look at Baker Hughes as well. Oil and gas. That's the service company out there. So let's pull up that one first and we'll go from there. IVZ. But just a quick look at Hershey first. Well, HSY. No, so it didn't. Maybe it didn't get bought out. I was thinking of something else. I'm glad we pulled it up. Hershey outperforming. Now think about this. That did take out a new high right here, right ahead of earnings. These guys do have a, I was going to say this, they've been down for a while, about almost a 3% dividend yield. Again, dividends are not guaranteed, but I wanted to highlight that as well. Yeah, could that RS strength off the bottom be enough to lift us up? Now, I would say this, that when we got 3 bars over here or whatever, and we started to see strength, that was enough to really kind of get us moving. Notice that trend did extend. So these could be interesting candidates as we get into this for the possibility of a trend follow through. Will that be a flag pattern or not? Well, that remains to be seen, but we'll see. Just always keep in mind, we got earnings there. IVZ was our next one. Let's see, IVZ. Yeah, Invesco. Okay, so some real strength there. Now, this has been going on for, I want to say, I think Invesco was 7 days. So you'd seen that earlier, but that strength did continue. I would say that's an earnings announcement right there as well. BRK was the other one. BRK. So Baker Hughes. Wait, BKR. There. Yeah, BKR. There you go. So yes, it was a gap out in a rally, performing the S&P. And just a quick comparison here. Okay, could that longer term trend maybe reestablish itself now? Well, that's something to kind of consider. Another one that's been moving in that group too, T-Mobile. T-Mobile broke above a range right here. You can see it's just taking out that level as well. It too has been showing some strength more recently. It was a day pause in there. We're kind of looking at win streaks like a 3-day. I think we had a 3-day here off the bottom initially, but you know, we're looking for streaks. So this one came earlier when I was testing this. Showing some strength, some initial strength here. This actually had some really good buying volume behind it as well. We don't know if that's going to rally or what if it's going to hold support here at this level. But I'm just saying that, yeah, it did. Okay, so it did beat earnings as well as it took out that level. So when you look at relative strength, folks, we have been talking about possibility of sector rotation today. We've been talking about the possibility of what they refer to, they term on the market as institutional buying or smart money buying, big buyers coming in. That is one way we discussed today on how to spot that, perhaps using relative strength. Not the RSI, but the relative strength itself and making those comparisons, relatively speaking. All right, everybody. Well, hey, I enjoyed going through this. Oh, yes, we can turn that into a scan as well. Absolutely. That way you can set it up whatever you want, scan whatever groups, as opposed to different columns. Yes, that's something we could certainly do going forward. Yeah, it is. It's going to be really cool to see what's outperforming. I agree with you, Lola. It's just going to be really cool to see what has been moving, at least on a 3-bar basis initially. Sometimes that could be enough to kind of, I don't know, it could turn the tide, right, if it's outperforming and finding out what's going on out there, folks. But hey, I'll tell you what, if you are getting value out of these presentations, if you liked what you saw today, do me a favor, smash that like button. Always lets me know that you guys find this is value if you do. Any topic requests are always welcome. I've been hitting those topic requests from, as I get to them as well. But, all right, let's see. There might be a question here. So not showing up okay. So if the scripts aren't showing up, now I posted that. So copy that script that I had sent through, and this is the process to follow, okay? So copy the script, go to setup, and then open shared item, and then just simply paste it in there, hit preview. You want to change the title of this, import as, and then import it. Now, this particular one that I just gave you, that is a ThinkScript column, everybody. So in the column itself, you can right click. You want to add any column in here, just right click, customize, and you can find it over here is where you'd find it. Mine's relative strength bar is what I called this, and that's what, if you call it that, that's what it would show up. There's a certain limit of how many characters you can put in, but that is how it's done. Let us know if that works. All right. Well, it's been a pleasure being with you guys. Smash that like button, subscribe if you're so interested in doing so. Thanks so much, JB, for helping out. It's always helpful. I really appreciate JB. Great friend and great coach. Check out some of JB's stuff. Does a terrific job. Everybody have a fantastic rest of the day. Look forward to hearing from you if you have any comments about this on the YouTube archive. Take care, everybody. See you next time.